What is going on, everybody? Welcome back to the channel. And in today's video, I want to give you guys a little bit of a trade breakdown, and I want to show you guys how I was able to make over $800 trading XRP the other day in just under 15 minutes. But I actually used a super simple trading strategy, not only to spot this trade, but also to execute it and get my entry. And this is something that we talk about on the channel very often. So I figured, why not break down this trade, as it's a pretty good textbook example for this specific strategy. So I just wanted to break down exactly why I took the trade, what I was looking at to enter, and why I love this specific trading strategy so much. That way, the next time XRP takes a pop to the upside or a dump to the downside, you guys know what to look for a potential fire trade entry. And the cool part about this trade, guys, is the fact that I was able to make over $1,300 while only risking $260 on the trade. And yes, it has to do with leverage, but it's not gambling, and I'm going to show you exactly why. So without further ado, guys, let's just get right into it. Go ahead and check out that XRP trade breakdown, talk about the strategy, and show you guys exactly what was going through my mind to take this trade and make that $800, or I guess $1,300 now, in less than 15 minutes. Well, the 800 wasn't 50. You guys get it. Anyway, let's get into it. So, guys, here we are on the XRP 4-hour time frame. And first off, I just kind of want to give you context into what I was previously looking at on XRP, which was causing me to actually be on the lookout for a short position. And it actually all starts with a missed entry. Now, as you guys know, as a trader, I do not take my entries unless I get all confirmations or if my key level is hit. If I don't get all the confirmations or I front run my level, and this example is going to let you know exactly why. And yes, guys, this has to do with liquidity sweeps. So as you guys can see here, we're on the XRP 4-hour time frame, and it all started, let me turn the TA on here. It all started with this level of resistance. Now, this was an area that I was looking for a potential short position on XRP. However, you can see we actually just barely front ran our key level, which in this case was a golden pocket and a time point of control. I know TPOCs aren't talked about much on YouTube, but that will be for another video. We talk about this stuff more in the premium Discord, but nonetheless, it is a key level to be looking at for some resistance, especially when it's in line with a golden pocket. So as we got the ride up there, I was looking for my short position, but unfortunately, we never came up to our key level, and I actually never got the confirmations to actually enter, so I wound up sitting out the trade. To be honest, expecting price to maybe get a small pullback before finally coming up into our level. But you guys can see we actually didn't get that. We just front ran the level and then just went straight down, right? And I did feel like I missed the moves, but understand, guys, the key to this kind of video, or what I want you guys to take away from this, is I did not FOMO into the trade. I always talk about how trading is a game of trapping and not a game of hunting. You do not want to sit down at the charts and look for trades. You don't want to sit there and hunt for a trade to get into. You want to set your traps and wait for price to approach your key level where you're expecting a high probability rejection or bounce, and then you want to look for your confirmations within that key level or your trap. This is how you could turn your gambling style of trading into an actual profitable trading strategy, by filtering out the bad trades and just sitting on your hands and waiting for the ones that are more likely to pay you out. So you could see here, guys, we did front run that level, and I'll be honest, I did feel like I missed that move. However, I didn't get the confirmations, we didn't hit the key level, so we let the price run. And in this case, if I wound up missing this move completely, that would have been completely fine. But actually, what happened here, guys, is we came down and we wound up bing-bonging around on this area of support. And then out of nowhere, we got this massive wick, which, to be quite honest with you guys, if you weren't taking profits here or here and you were simply just targeting lower prices on XRP, potentially maybe 55 cents is one of those key levels that I would be looking at. But if you were not taking partial profits, you would have gotten stopped out on this massive wick to the upside. But what is up with this wick? Why did this thing just wick all the way up to this level and then just instantly reject? And this is likely due to a liquidity sweep. And I know that there was actually fake news involved with this pump, but like I always say, show me the charts, I'll tell you the news. I was able to capitalize on this trade without even knowing that that news was happening. Now, the strategy that I used for this trade, guys, was a simple swing failure pattern amongst other forms of confirmations. I like to have at least 3 confirmations to enter a solid trade, but a big portion of this strategy was based off the swing failure pattern and the idea of finding where those resting orders are sitting, which is called liquidity, which is simply just money in the market. And a lot of times when price rips up like this or rips down like crazy, oftentimes the price is going to an area where there is a lot of stop losses, and oftentimes price will rip up into these levels, stop all the people who are short from this high over here, and then price will usually quickly reverse back to the downside. Now, there are a few different reasons this could happen. It could be a market maker manipulating the price to the upside to then go grab that liquidity and fill their larger limit orders to then reverse price all the way back to the downside. And when you get these big moves up, people think that there is a breakout, causing FOMO buyers and degenerate leverage traders who are actually sitting at the chart and then looking for the trade. They will go in, and as the price rips up, you have people FOMO longing into this candle, which actually could cause more fuel when price reverses to the downside. You will wind up stopping out all those long positions as well as liquidating them, causing an even more aggressive move to the downside. This is simply explained what an SFP is. Now, although this is not always what is happening behind the candlesticks, it is a very common occurrence, and this is typically what I'm looking for when I'm looking for swing failure patterns. So simply put, we see the pump to the upside, guys, and I am instantly looking left to see where the retail traders likely have their stop losses. Now, you can see there's probably a lot of people who were shorting these highs right here, and if they were shorting these highs, most likely their stop losses are going to be above the previous swing high, which in this case would be right here, above this swing high. But there are many people who are likely shorting within here, guys, and what that does is build up a lot of stop losses above this level, and a lot of people probably have their stop loss all the way above this high as well. So what does that mean? Not only do we have a lot of liquidity above these highs, but we could also have a lot of liquidity or stop losses and liquidations sitting above this high and this high. When I look for these SFPs, guys, oftentimes I like to look at the highest point on the chart or the lowest point on the chart, right? So in this case, we do have the highest point on the chart right here. So this would kind of be the sauciest level that I would be looking to swing fail. And knowing that I have a key level up here backing me up as resistance, it would look to me like this could be a very high likelihood reversal point, right? Especially if I'm able to look at the order flow and confirm that there are indeed people potentially getting stopped out in this area, which we're not going to cover in this video, but this is what I was looking for on this trade. And I am watching this price rip up in real time. So simply put, I am waiting for price to approach my swing failure level, and then I am waiting for that candle to push above that swing failure level and then wick back down and close the body of the candle right below that previous swing high. So that was what I was looking for on this trade. Again, amongst other confirmations, but I just want to explain this simple swing failure pattern strategy, which I've actually made videos on before, so I'll link that in a card above. If you don't know what a swing failure is, definitely go check out that video first, and then come back and watch this trade breakdown to see how I actually execute the trades. So I was watching price absolutely rip to the upside as we were approaching this swing failure level, and I am simply sitting on my hands waiting for the swing failure and simply waiting for my key level, this purple box, to get hit by price before getting into the position. For this specific example, I was looking at the 10-minute time frame, which honestly is not typically a time frame that I look for swing failure patterns on, but knowing that this was likely a liquidity sweep, I was checking all the different time frames to see if we were getting the confirmation of that candle close. And you can see here, as we are pushing up, price continues pushing, and you can see this candle right here pushed all the way up through our swing failure level and right up into our purple box, which was our key level of resistance that I was waiting to get hit back here, which we never touched, and we wound up coming up magically and tapping that level, and at the same time we wicked above it and we closed that candle below that SFP level. And at that point we have a confirmed swing failure, which oftentimes, guys, all you would look for to enter this trade was the confirmation of the next candle, and oftentimes that's where people will enter. But you could see here, guys, if you were entering in on the 10-minute time frame, you actually would have gotten a pretty late entry. Granted, it still would have been profitable, but you would have gotten a pretty nasty entry. You would have had to put your stop loss either above this wick, or I prefer to put it above the swing failure wick. So this is just generally not a great looking risk to reward. So what I like to do is to enter these trades a little bit earlier, guys. What I like to see is I like to go down to the micro time frames, such as the 3-minute or even the 1-minute sometimes, and in this case it was the 1 minute, and I like to see bearish divergences into those key levels of resistance, breaking that SFP level. And oftentimes when you get these bearish divergences, especially into a key level of resistance, even if it's on the 1 minute time frame, oftentimes that could signify that you are about to reject that level. And you could see we printed that bear div as we were tapping our key level, letting me know that it was probably a good idea to enter into the trade. And now I also was using order flow to confirm this entry, but like I said, we teach that more in the premium Discord, so that'll be for another video. Maybe I'll make a video about that down the road for the YouTube channel, but I'm not going to cover those confirmations in this video. But what I wanted to show you guys was the fact that we did get that swing failure, and as that candle is swing failing, this is where I'm going down to those lower time frames saying to myself, hey, are we getting any bearish divergences? Look at that. We did. We just got a bear div on the 1 minute, and you could be looking at this earlier as well. You know, as you're approaching the level, you can hop on over to that 1 minute time frame and wait for that bear div to actually confirm. You don't have to sit on the 10 minute or the 15 minute waiting for the swing failure. You could just see your price ripping up towards your level and then come down to that 1 minute and be like, okay, we're coming into resistance. We're getting a bearish divergence. Oh, baby, are we going to come down? And then obviously you want to be finding your other confirmations as well. So in real time, this may look something like this, where you're watching that candle rip to the upside. You're jumping down to the 1 minute time frame and you are simply looking for the bearish divergences. You do not have it here, so you would not be taking your trade. And then as you move the candles forward, boom, now you have your higher high on your price. Look at what's coming in right here. Lower high on your momentum wave, looking to print a red dot soon. That could be your entry. In my opinion, if you can't enter on a low time frame swing failure, like if this 5 minute candle is not going to swing fail, which it didn't, if you don't get the swing failure here, you may want to go down to those low time frames and look for the divergence entry. So you have your higher highs on price, your lower highs on your momentum waves, VWAP rolling back over, and you could potentially start looking for your entries at this level, targeting the support levels down below, in this case, the value area low of the range. And then you watch price print, and boom, you start rejecting. Oh no, we're pushing back up. Oh my God, we're going to get stopped out. And then boom, you wind up printing the actual divergence. You were in early, and boom, you get the big drop to the downside. Now, the cool thing with these swing failure patterns is, guys, the way they work, like I said, when you get the aggressive move up, and then they very often give you super aggressive moves to the downside, if you could pinpoint that entry, you actually don't have to ride this trade through much drawdown, right? You can just get in, enter, and oftentimes it will just insta-nuke from your level. Now, not 100% of the time, but when they play out, oftentimes they play out very, very hard, making it a super high risk to reward and a super, super high probability play. And like I said, that move to the downside could be happening from all these people FOMO longing into the key level of resistance. And as the market maker fills their larger order up here and pushes price down, they will start to stop out these late long positions. And what happens when a long position gets stopped out? It creates a market sell, putting additional downward selling pressure on the market and putting extra money in your pocket. So you guys can see here, we wound up actually getting that very, very, very quick move down. And we wound up coming all the way down to about 64 cents, all the way up from about 74 cents. A nice 13% move with almost never going into drawdown. So you could see how quickly and aggressively these moves actually wind up happening. And at this point, guys, once we got this move down here, I was able to turn $260 into over $800. And in this case, guys, I was able to turn that $261 into over $800 in about 14 minutes. Now, we did get that quick over $800 in about 14 minutes, guys, but I did actually wind up holding the trade a little bit longer. And I'm not going to dig into this, but it was basically just based off of money flow on the 4-hour time frame continuing to the downside, indicating to me that the downtrend will likely continue. And then knowing that we swept the liquidity from above these highs, we finally hit my key level, and that money flow was just the cherry on top. And as we play price forward a little bit, you can see that we actually wound up getting an even bigger move down. That original 13% move in 14 minutes wound up turning into a 20, almost 21% move. Now that trade is currently up just over $1,300. I will go ahead and pull it up right now. And you can see right here, guys, I am still in that trade, holding it based off that money flow and the idea or theory that we had grabbed that liquidity from above, fueling a bigger move to the downside. So I decided to hold that trade, and that original over $800 has now turned into $1,331 as of right now. You guys can see I did only use $261 on this trade turning it into $1,331. And this is the last thing I want to leave you guys with, because I was using 48x leverage on this particular trade, and I want to be very clear. The reason I was using such high leverage here is because I knew, based off my trading plan, I was already looking for a swing failure, and I know that these do not have a lot of drawdown typically, and when you enter them, if done correctly, you're almost instantly in profit, expecting that big move back down to lower prices. So because I knew that this swing failure was not only a high likelihood trade, but likely it wouldn't go into big drawdown, what I did here was I only put $261 on the trade, and I put it on a 48x leverage because, again, with these swing failures, you can use high leverage because there's such high probability, and there is such a clear invalidation point for the trade, which in my opinion is above that swing failure wick. Once you break that wick, your trade idea is invalidated, and you instantly know that it's a bad trade. So I'm able to use high leverage with low money just because it's such a high probability trade. And if you get stopped out, no big deal. Even if I got liquidated on that $261, guys, as you can see here on my Bitcoin trade, up 700%, I've already got about $2,450 locked in profit, and then I still have over $1,000 in unrealized. So even if I got liquidated, which I wouldn't, because you guys can see I do have a stop loss here, but even if I did somehow get liquidated on this trade, it's no big deal because I could get stopped out of so many of these trades before it even starts to eat into my profit on my winning positions. So just to recap here, guys, we simply did not take the trade here because we didn't hit the key level or get the confirmations. So I sat on my hands. I did not FOMO in. And you can see, magically, the price just wanted to go wick up and touch that level I had on the chart before giving me another chance to actually get the confirmations to enter my trade and take the actual position, where if we took the original position here and we didn't take profit down here, we would have easily gotten stomped out of that short, and then it would have dumped without us. And I know a common question on the channel is, Frankie Candles, how come every time I do my TA, I'll get into a trade, they'll stop me out, and then price will just go in the direction I originally thought? And I'm sorry to say, but this is because you are the liquidity. I hate when people say that, but that is simply what's happening, because oftentimes what was happening here, people were simply shorting this high with their stop losses above, and the market makers wanted to come stop those shorts out to likely fuel a larger limit order to the downside, and then adding that fuel to the move down by stopping out all those long positions and then getting that bigger move to break the lows and come to lower prices. So guys, if you're getting into trades and getting stopped out just before the price goes in the direction you already thought it was going to go, likely you are the victim of a swing failure or a liquidity grab like I just mentioned. And now you guys have the tools and the strategy to hopefully avoid this stuff. Now, again, you do want to have a little bit more confirmation, whether you're looking at something like Lux Algo, Market Cipher, money flow, divergences, any other indicator, order flow, whatever you are looking at, you want to have multiple levels of confirmation. So hopefully you guys are understanding why you're likely getting stopped out of your trades so often right before price goes in the direction you already thought. And hopefully the next time you hit your charts, you'll already have your levels set or your traps, and you're just waiting for that level to get hit before looking for your confirmations and getting into the trades. So with all that being said, guys, that's all the time I got for today's trade breakdown. I just wanted to spit a little bit of free value to the Mafia here, give you guys some real insight into what I look for when I get into these trades. I do show them on the live stream a lot. I have gone over swing failure patterns before, but I really wanted to break this one down because it was a perfect example of why you should not be taking trades if you don't get your confirmations, because you never know, that key level you have on your chart may just want to get tapped by the market makers. So guys, with all that being said, that's all I got for today's Sunday Sauce. Hopefully you guys enjoyed. Now go take this strategy and anything you learned from the video, go apply it to the charts and start making some dang money, Mafia. That's all the time I got for today's video. I'll see you in the next one. Frankie Candles.
Here we go, at the top of the class on a roll, and it's time to run it up, yeah, you know. Maxed out, put the pedal to the floor, ayy, on the road, here we go, here we go. Yeah, we winning by a landslide. Never see me coming, I'm a landmine. Yeah, I ain't taking orders in command, like, yeah, you about to see me.